So let's skip forward here a little bit. Now we're going to get to sell trade rules. Okay, and these are just the opposite of the buy trade rules. Now the long term needs to go into sell. The 100 EMA needs to be below the 100 SMA. The medium term needs to go into sell. The 13 EMA needs to be below the 21 EMA. And the 5 and the 6 crossover needs to give us a sell signal, which is going to appear as a red arrow. And the 5 basically needs to cross below the 6. Okay, and the buy rules are just the opposite. And we need to wait for all these conditions to be met before we enter a trade. Okay, and once we get all the conditions met, basically the long term is going to cross last. Okay, and usually when the long term crosses, there's going to be a pullback. On the medium term and even on the short term and the medium term. So when those change directions, we know that we're getting ready for a trade. And once we get, the medium and the short term going back into a buy or a sell, we know that that's where we're going to get in. Yeah, Derek, this is a really nice trick. He's saying he likes to use, he's used the dropping down to a smaller time frame in search of a trend. 4 hour, 1 hour, 15 minute to find that trend, and you get a really great perspective on what's actually going on in the market. Like that the long term might be down, okay, but you look at the median, or you look at the 4 hour, that might be down. The 1 hour is mixed. It might be mixed. The medium term on the 1 hour might be up. The short term on the 1 hour might be up. And so, what's going on here? There's some conflicting signals. Well, if you drop down in the 15-minute, all of a sudden, hey, wait, there's a trend. I can trade this. And you basically, when you find that trend, you trade the snot out of it. You just trade the tar out of that trend until it changes. And there you go. And when the long term and when the 4 hour and the 1 hour actually come back in line, you guys, it's just absolutely crazy how much money you can make that way. So let's get on to some sell trade examples. So here we've got a couple of sell trades. Okay, now this is the euro pound on the 4 hour chart again, and we've got a huge candle right here. Okay, now this may have been caution for getting in. Okay, because what happens is a lot of times the move will kind of be used up. This one happened to run quite a ways. So if you see something like this, it might be a good idea to get out, or you can bear in mind that there might be a pretty big pullback. You could pull back halfway or even all the way up here, but your stop loss would be up here. So if you get in on something like that, be aware that the market may pull back substantially for a while before going back into your favor. Now what happens here, the market just makes this big drop, and it trickles down and actually goes on for a nice, very nice 2-to-1 trade here. A little while later, we got a decent pullback, okay, and everything's in order. The red is above the blue is above the, these two are in the longer terms in sell. The medium term is in sell. The magenta one is above the green one, so we're definitely in sell. We can draw another trend line. We get a break, and we get the crossover of the 5 and the 6. And that goes on for another nice, 2-to-1 trade. And in this area right here, this is a point of interest. Okay, we got a 5-6 crossing back upwards. Okay, and we have some obvious support here. So what we can do is we can draw support across these bottoms right here, or even across this bottom right here. We can wait for a break, and once we get that break, we're still trading within the direction of the trend, and at this point, when it breaks, we can add to that position up to our initial target on our first trade. So that's how you do that. You want to be very careful when you add to a position. You want to make sure you're in the right right area to add to your position. And that's where it would have been. We draw some support right here. We get the break, and our target for 2 to 1 would have been somewhere down in this area right here, and we could have added to our position right here and taken a little bit more more profit on that trade. So we've got the 5 and the 6 crossover is our entry trigger, Victor. You know, that's our entry trigger. When we see, you know, a pullback like this, and then you know, and a red arrow pop up, that's where we get into the market. Now, Pablo, this is a good question. If there's no pullback, what do? Nothing. You wait. Okay, and that's being smart. That's saying, okay, you know what? The conditions haven't met here yet. There's no pullback. There's no place to enter. I can't just jump in and, you know, because I don't know where it's going to stop. You know, a lot of times, more often than not, I've seen trades, you know, where you show up to the market and all of a sudden, excuse me, all of a sudden you're down in this area right in here. Well, there's nothing. The market's just going sideways. Or you show up at this point, oh, I got to get in, you know, the market's already moved this far, you know, I got to get in, the market might take off without me. Well, you know what? I've seen more often than not that if you get in on something like this, you might get one candle moving in your favor, and then all of a sudden it just goes sideways and then turns around. A lot of times when you show up late, you're late, and the move's already happened, so you just, you know, forget about it. Wait. You know, I've learned over the years that whatever makes you wait is what's going to put money in your account. Okay, if you can't wait to, if you show up and you think, oh great, the market's moved without me, I'm going to get screwed, so I better jump in right now and catch what little I can, or whatever's left of the move. Okay, you don't know where that move's going to stop, and if you jump in late, your stop's going to be huge. Your risk reward is going to be way out of whack, and it's just not something that you want to do. You want to wait for the entry conditions to be proper and for everything to line up right. Okay, and that's whatever is going to make us wait for the proper entry is what we need to do. Okay, and that's what's going to that's patience wins the game here. Colin, there is a 5-6 crossover indicator that that I made available last week, and we'll get to that. We'll get to that when we get to the charts here. Pablo, I'll trend trade the snot out of a trend. You know, I definitely like getting in at the beginning of it. I like finding the start of it, because that'll give me a couple of really great trades. And once I've made my trades, then I kind of walk away and wait for the next setup. And if something, you know, comes along, then great. But I have kind of a trading window. I don't really like to trade outside of, you know, between 6 a.m. and noon, maybe 1 o'clock. You know, so there's a 6 or 7 hour window that I trade in, and if I get a signal outside of that, you know what, I'm done, because a lot of times, you know, after noon, 1 o'clock, the market's going to kind of slow down because everybody, you know, the one session's closed, and all the bankers in New York and around the world are taking their lunch, and so there's not really a whole lot going on. So they've already taken their money for the day, and they're going on lunch. So that's you know, that's the reason for that window. And if it's outside of that window and something sets up, yeah, whatever. I've already made my money for the day. I'm going home. You know, I'm going to go. You know, I'm going to go for a hike. I'm going to go fishing. I'm going to go do whatever it is that I've, you know, been wanting to do for that day. I'm going to go do it. Okay. And Nico, yeah, you're absolutely right. You know, not waiting will burn you every time. It's one of those things that you get excited and you jump in, and then all of a sudden you get burned, and it's like, oh crap, why did I do that? If I had just been paying attention, if I had just just stopped and looked at the market for a second, I never would have taken that trade. And if you wait, you're going to do great. So let's get on to our additional indicators here. We are going to add a couple more indicators, and we're going to add the RSI, and we're going to set that to 21. Okay, and the reason for that, you guys will see it on a chart. It's a great. This setting is actually a pretty good trending indicator. Okay, and the stochastic. The stochastic oscillator is another indicator that we can use to show us overbought and oversold areas. And we're going to leave that at the default setting at 5, 3, and 3. But you guys can pick kind of whatever you guys are most comfortable with. I know a lot of traders, they'll use like an 833 or an 853 or even a 14 period stochastic. To show overbought and oversold levels, less chop that way. Whatever you guys are comfortable with. I'm gonna show you guys the 533, and I'm gonna show you how to use that. Now, what we're looking for is overbought and oversold conditions on the stochastic, and for the RSI to be above or below the 50 line. Okay, and this will make a lot of sense when I get to it on my charts. And there's actually some really cool little tricks that you can use the stochastic and the RSI for, other than looking for overbought, oversold, and crossing a 50 line. Okay, those are just kind of some. Those are kind of the basic ideas of what we're going to be looking for. But we're going to get to some cool little tricks that we can do with that. This is a good question. How do I deal with trades when the indicators are close together and the currency pair is ranging? What strategy do you use to pick the breakout from the ranging market? Basically, if you're on the 4-hour time frame and you're looking at it and you can draw support and resistance, then draw support and resistance. Okay, and you look where things are at. If the short term and the medium term are up on the 4-hour, but the long term is down, well, drop to the 1 hour and see what's going on there. Okay, after you've drawn your support and resistance on the 4-hour, you go to the 1 hour and you see what's going on there. Oh, okay, it looks like we're in a trend here. So what's going on here? So you drop to the 15-minute. Oh, okay, the trend has changed on the 15-minute. I think I'm going to leave this alone. Okay, because if you're close to resistance and the trend has changed on the 15-minute, there's a good chance that might be turning around. Okay, and if you can't get a very good feel or not feel, but if you can't get a very good read on what's going on, if there's a lot of conflicting signals, such as in a range-bound market, the pound dollar today was in a range-bound market all morning. It made some nice moves down, overnight, but we were range-bound all morning. Okay, and there was high-impact news coming out. So if you know that the New York session is about to open or the London session is about to open, okay, and everything's range-bound, check the news. And if there's high-impact news coming out for that pair, stay away from it. Period. Okay, because a lot of times you get burned. Sometimes you might get lucky and pick the direction of the news release, but it's just better. Honestly, that's gambling. Okay, because you don't know what's good, good or bad. So a lot of times you get a news release and it's actually good for, say today was good for the USD. Okay, and all of a sudden, you see the USD drop. All of a sudden, the euro gains strength and the USD just drops like a rock. Well, wait a minute. That news release was good. So what's going on here? Well, a half an hour later, everybody realizes, wait, that was a good news release. So we want to dump all our money into the USD and it shoots back up. Okay, that can happen. And there's just a lot of emotion, a lot of uncertainty, and you want to stay away from that. If you're not sure, then stay away from that. And when we're trend trading, we can trend trade a pullback from the higher time frame on the lower time frames, and you can really nail some nice trades. Okay, and that's the name of the game. And you want to be very specific, and you want to be very smart about what you're doing. The professionals will do this too. They'll pick their trend on they'll pick their trend direction on the higher time frames and work their way down and find the best entry. And when they find something they like, they're all over it. So what we're going to be doing is when the stochastic is overbought in a downtrend, we're going to be looking for short trades, and when it's oversold in an uptrend, we're going to be looking for long trades. Okay. Now, on the flip side, when it's oversold in a downtrend, we need to be on the lookout for the market to pull back. Okay. It's a good indication that things are going to turn around and go back the other way, which is going to, we need that in order to trend trade, the direction that we're wanting to trade. And if it's, oversold in a downtrend and the market completely turns around, you haven't missed anything. Okay, you're waiting for the proper setup, and you're saying, no, conditions are not right for me to do this right now, so I am going to wait. Okay. Now, when it's overbought, when it's overbought in an uptrend, okay, we need to look for pullbacks as well. It may not happen immediately. The stochastic can stay in overbought or oversold for quite a long time before a move backwards can happen. But we can keep an eye out for something to happen, and we can be aware of it, and that's what we want to do. We want to be as aware as possible of what's going on. Okay, and that's the name of the game. If you are, it's like driving a car. If you're not paying attention, if you're not aware of your surroundings, you can get really, really hurt. And that's what I want to prevent. With showing you guys this stuff, I want to prevent as much hurt as possible. I want you guys to be as aware of what's going on in the market as possible. Know your support and resistance. Know where everything is at, and what's going on. Now, the RSI is going to be another trend trading indicator for us. With the longer setting, once it changes positions and gets above or below the 50 line, it's going to generally stay there. It might retest that a little bit. It might poke its head, above or below, but it's generally going to stay in that area. And when the trend is strong, we can definitely see, we can gauge how strong that trend is. And it's a very good visual representation of what's going on. So, when the RSI is above the 50 line, we're in a general uptrend. And we need to confirm that with other indicators. And on the flip side, when it's below the 50 line, we're going to be in a general downtrend, but we definitely want to confirm that. And if we've got a lot of conflicting signals, then we want to move to something that is not conflicting, that gives us, the best visual representation that we want to see, and this is a really great way to do it.